tonight?
Okay, we got Trade Desk, which I think is one of the most exciting stories in the world. This is a better stock at this point than Roku to be able to play over the top. VMware, it's been kind of, let's say, held back by Dell. Let's find out whether that's true. And then Nikesh Arora. I know Nikesh is a very competitive guy, and I think he's going to say that the best one, cybersecurity, of course, is his, Palo Alto Networks. It's a pretty exciting show. I like this. I like this show.
It's a great space to watch right now.
Yes, it is. Thank you very much.
Enterprise and Software. Thanks, Jim. We'll see you tonight.
Thank you.
When we come back, exclusives with Carlyle Group's co-CEO and the CEOs of UPS, CVS Health, and B of A.
Wow.
Through the AT&T network.
Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
To LeBron. Slam dunk.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. The Miami Heat are taking their talents to Texas to take on the second-year phenom, Luka Doncic, and the Dallas Mavericks.
Pulls back, trying to make it 11-2.
This Saturday, the Miami Heat are at the Dallas Mavericks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Wednesday morning, welcome back to Squawk on the Street. I'm Carl Quintanilla with Leslie Picker, David Faber, who's in for Sarah Eisen at Post 9 of the New York Stock Exchange. Market here trying to rally a bit. Dow's up 15 points after starting down, about 50 points in the red. S&P 31.41 on a busy Fed day.
Our roadmap today starts with the world's most valuable listed company, Saudi Aramco. Surging in its IPO, will take you live to Riyadh for more on its debut.
Countdown to the Fed, what investors should be looking for ahead of the last decision of the year.
And more headwinds for Boeing, the FAA administrator testifying before Capitol Hill this hour on the 737 MAX.
We'll begin, though, with the world's most valuable listed company, Saudi Aramco, raising a record $25.6 billion in its IPO. Our Hadley Gamble is live in Riyadh with some of the highlights. Morning, Hadley.
Hey, good morning, Carl. A long day here in Saudi Arabia, but a historic day as well, and one which the Saudi government is saying is vindication. Vindication for all of of the talk over the last 4 years since the crown prince of this country, Mohammed bin Salman, announced the IPO of Aramco back in 2016. You'll remember he was talking at that time about 5% of the company. He was talking about a $2 trillion valuation. A lot of water under the bridge since that time, of course. But I got to tell you, from the start of trade this morning at 10:30 local time, we saw this stock up 10%, and it didn't fall from there. Closing today at around 35.2 Saudi riyals. That's just over $9 per share. A lot of folks speaking to us on the sidelines of this Aramco conference earlier this morning when they rang that bell, talking about how thrilled they were that they were able to bring this stock finally to market, and frankly, suspecting that we could see Saudi Aramco opening higher tomorrow, trading up tomorrow as much as 10%, and possibly by the close of trade getting above $2 trillion. Guys?
Hadley, what does today's debut mean for a potential future international listing? I know there's been talk of a secondary listing in Asia somewhere. Do most people believe that today was successful enough to accomplish that?
It's interesting because the folks that we've been speaking to over the last several months, a lot of momentum getting behind this following those attacks on Saudi Aramco, those at the Abqaiq facility that we covered just in September. Remember, at that time, this really was used to galvanize not just the government, but the company to get this IPO fast-tracked into market. It's been really interesting to speak to local investors specifically over the last couple of months. They do seem to think that an international listing is possible. And when you look at the possibilities in Asia, for example, as we've seen reported lately in the press, something like China, Japan looking very attractive because of the yields. It's really interesting to note as well, the retail portion of this Aramco IPO, we're talking about 0.5%. 5 million Saudi individuals decided to buy Aramco. That's 13% of the population. So that's really a signal that in spite of the reports that we've heard, particularly in the Financial Times in the last 24 hours, that so many folks who had been involved in the Ritz-Carlton roundup had been pressured to buy this stock, at least 5 million Saudis decided to buy in. And that signals confidence in the company as well as confidence, frankly, in the leadership.
Certainly on day one, Hadley. Thank you for that, our Hadley Gamble. Interesting contrast, the day one pop on and limit up on Aramco, along with the more structural long-term warnings coming out of Chevron and this $10 to $11 billion write-down.
That is a very good point, that, you start to see kind of the value of shale and how people are assessing the assets in the oil industry. And a lot of people, especially stateside in Europe, looked at the valuation for Aramco. One of the big reasons that they did balk at this deal, because only 10.5% of the Aramco IPO was made up of foreign investors, was due to valuation. I think they believed that Aramco was coming at a pretty lofty valuation. It's interesting when you see the 10% jump, whether that indeed was true from those who did buy in.
We'll watch that closely, obviously. Big implications for the future of oil as a commodity and certainly the way it's listed in the public markets.
Indeed.
In the meantime, investors are awaiting the Fed decision later on this afternoon. Any new details from the ongoing China trade talks? Headlines relatively quiet so far this morning. Joining us today, Stifel's chief economist, Lindsay Piegza, and Keith Lerner, chief market strategist at Truist, formerly known as SunTrust Advisory. Morning, guys. Good to see you both.
Good morning.
Keith, let me start with you just to talk about the price action, where we are, especially leading into not just the binary effect of today's Fed decision, but whatever we're going to get on these Sunday tariffs.
Well, I think the first thing is, for some perspective, since October when we were on the show, we thought that the selling back then was overdone. We've had a nice rally, about 8 or 9%. Markets consolidating ahead of this announcement. We still think, though, as you look out next year, the path of least resistance for the market is higher. And on the tariff front, obviously there's a lot of uncertainty, unpredictability about this over the near term, but I still think that over the next year there's an incentive for the White House to have a ceasefire, because the last two presidents that were not reelected had something in common, and that was a rising unemployment rate. And I don't think the administration is going to want to see trade remain an overhang for the economy.
I guess from an economic standpoint, we know sort of the basic narratives. Consumer, relatively strong, seemingly unaffected by any hand-wringing over tariffs, whereas it's corporate that is a little more anxious.
Absolutely. We've seen business investment now trending negative, which is one of the big red flags, I would say, for the economy heading into 2020. The Fed seems very optimistic that we're going to be able to maintain this 2% growth rate with inflation pushing back to 2%. But I don't know if the data necessarily supports that rosy outlook. So when we look at what's happening in the economy, I think the Fed very clearly wants to move to the sideline. but I think we're going to need some more confirmation in the data before the Fed can really breathe easy that they're done easing after just 3 rate
Really?
cuts.
What do we think would prod them to ease at this point?
Well, the Fed has set the bar relatively high for the economy. 2% growth, 2% inflation. Inflation's at 1.3%. And growth, if we see begin to falter with the consumer, as you mentioned, is relatively strong for now. But if we start to see businesses pull back in terms of investment, in terms of hiring, in terms of wage pressures, that could very quickly derail the consumer, which at this point is the sole support to the economy.
And then, of course, you've got tariffs on, the potential risk for a hike on tariffs this weekend.
Absolutely.
There is so much expectation that seems to be built into the market. People expect those tariffs not to go into effect, that they will come up with some sort of a deal beforehand. People expect kind of Fed policy, more of the same at today's meeting today. Is there a risk that there is all of this consensus kind of built into the market for factors that, on the surface are by their nature uncertain?
Absolutely. And in fact, I'd like to hear from the chairman today during the press conference really address how much of the Fed's forecast, again, of 2% growth, 2% inflation, is based on a realized assessment of the data as opposed to unfounded expectations for an improved outlook, particularly based on some sort of near-term trade agreement between the U.S. and China, which may or may not come to fruition at this point.
We're going to get his take on that, hopefully. Keith, I wonder, we've started to see some macro desks talk about repo disruption, the possibility for further repo disruption going into the back for the last few weeks of the year. I mean, how relevant is that to your short-term model?
I think the Fed's going to do whatever it takes to keep the repo market, liquid and not be an issue into year end. So it's not a big impact in our view. And I think we're a little bit more optimistic about the U.S. economy as we head into next year. We just have the unemployment rate at a 50-year low, initial claims at a 50-year low, new home sales are at a cycle high. These are not things that tend to happen right before a recession. Growth is going to be modest. We're expecting a little bit over 2%, but that's still relatively good, and I think enough to help this market move forward. But I do think it's going to be 2 steps forward, 1 step back, especially as you have some of this policy uncertainty lingering into the new year.
And Keith, you also like high yield right now. You're not turned off by it being too expensive?
Well, more in a portfolio context, I think we have to really there's this kind of push and pull between the demand for yield and these really tight spreads. So we're focused on the fixed income side of portfolios more towards high quality, but a small portion for clients that makes sense. There's still a decent yield pickup in the high yield space. I will say overall within a portfolio context, our general advice is still to be overweight equities relative to fixed income.
We're going to get a UK election tomorrow. You think the pound's done doing what it's going to do?
Well, I think we've already seen a lot of volatility heading into the most recent analysis, which shows that Johnson may be losing some traction in the polls. Right. Absolutely. So I do think we're poised for more volatility in the currency market.
Keith, how does that affect what, as a lot of the macro desks have to make choices about their 2020 playbook, U.S. versus Europe?
Yeah, we are still leaning with the U.S. I think the performance differential will probably narrow somewhat. In order for the international markets to really outperform, we need 2 things. We need the global economy to recover and a robust recovery, and we need interest rates to move higher. The financials are the big part of that market. So I think they will do better, but we're still skeptical that the global recovery will be as strong as the consensus thinks next year, which would really help power those international markets.
Lindsay, we were chatting just a little bit ago about Chevron taking a $10 billion charge related to, oversupply of assets in the arena. Is that a concern for you, especially as it relates to this overabundance, in the U.S. and how it could potentially spill over
in terms of corporate debt? I think that's absolutely a macro concern, and the chairman of the Federal Reserve has pointed that out as one of the concerns that he has going forward. If in fact that is some sort of a bubble scenario, which could be the next shoe to drop and derail the U.S. economy, so it's something we're keeping a close eye on, but not necessarily something that we're factoring into our base case forecast as one of the primary risks to the downside.
So even though it means that oil prices might be lower, that could help the consumer.
Absolutely.
It's still a potential risk.
The fastest way to derail the consumer is heightened energy prices. On the flip side, lower energy prices can certainly help sustain the consumer going into the key holiday spending season. We'd like to see that.
as it sits there just below 60. Lindsay, Keith, we'll see what Powell says this afternoon. Thanks, guys. Appreciate it.
Thank you.
Thank you.
When we come back, we're going to go out to the Goldman Financial Services Conference, get an exclusive from the co-CEO of the Carlyle Group. But first, our Jane Wells is live from Las Vegas with a look at what is still ahead in the show. Good morning, Jane.
Hey, David. Yeah, I'm at the MJ BizCon, and this is not your father's marijuana industry anymore, but there's still a gaping hole in the business model. Now a serial tech entrepreneur thinks he has a solution. We'll have that story when we come back.
On 3, our unlimited data is actually unlimited. Like for reals. None of this, we're so unlimited, but you can't watch your fave Christmas film endlessly. Or dead scroll inspo for tree decorations until 4 in the morning. We wouldn't do that to you.
We have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Ho, ho, ho.
Switch to 3, in-store or online. See 3.co.uk/unlimited-data.
Ah, Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in-store or search Tesco Mobile. Tesco Mobile. Every helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Let's get out to day 2 of the Goldman Sachs Financial Services Conference, where our Wilfred Frost is alongside a very special guest. Hey, Will.
Hey, Leslie. Thank you very much. Yes, here at the Goldman Sachs Financial Conference and joined by the co-CEO of Carlyle Group, Q Song Lee. Q, thanks so much for joining us. Great to be with you.
Well, I'm delighted to be here, and thank you for having me.
We want to start on some of the macro sentiment. A lot of the bank CEOs at this conference have been striking an overall upbeat tone, but particularly upbeat on the U.S. consumers. As you assess the U.S. economy, do you think it's just the consumer that's strong?
Well, you know, the consumer sector is certainly strong, and it's offsetting some of the weakness we're seeing in industrial. But globally, when you take a step back, we are in a period of time, I think, where we're seeing slower growth globally. It's not negative, so we still have positive growth, but it's the whole world, we're seeing it as slowing down. And I think the number one question I keep getting is, do you see a recession in 2020? And right now, our data would say probably not. But I think the real question to ask is longer term.
Only probably not.
Right,
So
probably
it's still
not.
possible.
Yeah, my confidence level isn't as high as it was maybe a year ago, but I do think there's still enough positive momentum, especially from the consumer sector, as you pointed out, that we're going to not see a recession. But I think the more relevant question is to understand that there are a lot of secular and structural forces at work, which would basically create an environment for an extended period of slower than ideal growth, of very difficult policy issues, and quite frankly, a lot of volatility. And in that environment, I think it's going to be a slow sideways grind for a lot longer than people might think.
I guess one of those policy issues, it's always front of mind, is the trade war with China. As you assess the current state of play, do you think there is a genuine incentive, enough of an incentive on both sides to get to a deal, phase one deal, fairly soon?
Well, I'm not in the prediction business anymore of whether we have phase one or not. Hopefully, we will have a phase one deal. But I think if you take a step back, we're in a period of time where two very large economies and ecosystems are trying to figure out the right way to actually relate to each other. And I think we're in a period of time where constructive engagement is going to be needed, maybe even on a multilateral basis, to find fair standards that work for on an international standards basis, where we have healthy competition, where we have free flow of capital and smart regulation, so that these ecosystems can learn to coexist and mutually prosper. I think to get to that is going to take a lot longer than people think. So I'm very hopeful. I'm not predicting. Hopeful that there will be a phase one deal, because certainly you need phase one to get to phase two, phase three. But there are lots of structural issues at work here, and I think we should all be prepared that for a long period of time, there are going to be a lot of bumps in the road as these two ecosystems learn how to coexist with each other.
Let's talk more specifically about Carlyle. And you've been co-CEO for a couple of years and made a number of changes. I wonder how difficult it has been to make changes when you've taken over from such infamous, successful founders who are still sort of involved in the business, if not operationally in charge. You know, whether that's tightening up things like the credit business or broader change of strategies. Has it been hard to make changes? And what do you think the biggest change?
The founders built a great firm, but look, the industry's growing, competition is tough, the world is changing, the investment environment is as challenging as it's ever been. Transition happened 2 years ago, and we've been very focused on our priorities. We're driving earnings, trying to improve margins. We've got some really important initiatives going on in certain segments like global credit, which is our fastest growing segment. We've selectively used our balance sheet to make important strategic investments, for instance, a foray into extending our asset management capabilities into insurance. And finally, we've wrapped that all up with changes in our corporate structure, where we're going to have the most transparent and the most aligned governance structure in the industry moving forward. Now, these are all corporate initiatives, but I also have to point out, culturally, we have made huge strides in pushing diversity and inclusion. For instance, we're already one of the leaders in diversity. Almost half of our assets are managed by women. 50% of our new employees are women. And the essence of our business is to make great investment decisions. We're in the judgment business. We want to have the best, diverse, and the most experienced viewpoints around the table when we have to tackle these complicated issues. And we are already leaders in the industry on this respect, but quite frankly, we've got a lot more work to do.
What do you feel about private market valuations right now? I mean, we all talk about it a lot. It was an extreme example, but was it representative also of other examples like that of a bubble in private market valuations?
Sure. I mean, it's hard to say that private market valuations aren't high, but I point out valuations are high pretty much across all asset classes, bonds, real estate, you name it. You know, when you have central bank policy that's been fairly accommodative and as much money in the world sloshing around, you're going to see asset valuation reflation like you've seen everywhere, and private markets are no exception to that. But when you have a business like ours, which is very diverse, all regions of the world, looking at all different industries, the issue for us isn't to say, how can we buy something and hope that the multiple or the valuation expands even more? For us, how we create value is to make the businesses better. We have to figure out ways to help them grow, improve their margins, drive real cash flow. And so I think we're in a world where I'm not betting on valuations coming down. I mean, you may see some dislocations and periods of time where valuations reset, but there's too much money in the world flowing back in. And so we have to prepare ourselves and invest with a view that you have to create value not by trying to make the valuation multiples higher, but by improving the businesses fundamentally so that they can earn a higher rate of return through just good old-fashioned blocking and tackling, generating value in your business.
Do you fear a price pressure coming into your business in the way that we've seen with active management, whether it's the broker price wars or shifts into indexing?
Well, our industry is not immune to obviously sophisticated customers trying to ask for certain types of fee or price, but we've been we've been quite fortunate. Our funds have been more in demand than not. They've been oversubscribed. We have a terrific track record, and when you have all that, we've been able to maintain pricing. It's clearly an issue which is going to continue in the industry, but basically there are headwinds to our industry. It's a $6 trillion business. It continues to grow, and when you have that kind of demand, I'm pretty hopeful that we'll be able to maintain pricing.
I want to move on and talk about Taylor Swift's battle with big machine records. Where does Carlyle Group stand on that?
Look, she's an incredibly talented performer and wonderful artist. I'm not involved in the day-to-day of all of our portfolio companies, but we have a talented, really strong team at Carlyle working in partnership with a great management team at the portfolio company level, and I've got every confidence in the world that it's going to turn out to be a successful investment.
If things elevate from where they stand, does Carlyle ultimately stand by Scooter Braun and the legal terms of the investment that's been made, or do you kind of understand some of the more emotional human arguments that also apply here?
Well, look, in every business there are risks. Every industries there are risks, and when you're in the investing business, you have all sorts of risks from regulatory to financing, and these risks are no different. They're peculiar or particular to this industry, but we're well experienced in terms of managing through and working with our management teams to try to get to great outcomes.
Senator Warren tweeted about this particular issue. She said Taylor Swift was one of many whose work had been threatened by a private equity firm. Do you think that's itself an accurate statement, and do you think that private equity gets an unfair framing of the work that it does by some politicians?
Sure. Without really addressing the tweet, I do think private equity is a misunderstood industry. I mean, we have an enormous value-added function in the economy because of the returns we're providing to first responders, teachers, folks in unions, and we provide the returns that enable these people, grandmothers, grandfathers, to retire comfortably. And that's a little bit understood, but what's really not understood is the role we play at our companies. We help businesses become better. We build better businesses, and everything we do is to invest for impact. So it's not only about looking for financial returns, but we're in there helping improve ESG policies, create and drive diversity at our, not only at the boards of these companies, but within the companies themselves. It's figuring out how can we invest more in R&D, capital expenditures, to drive growth and thereby create jobs. So there's a whole aspect to our industry that's not as well understood, but it's pretty darn value added. And I think that story is probably something that needs to be better communicated.
You mentioned your returns over the long term and how impressive they've been, and we talked about the change in the corporate structure. The change in the corporate structure for some of your rivals has led to an incredible appreciation in the share price. Yours is to come. I wonder, to finish on this, Q, whether you think investing in the next Carlyle private equity fund or buying the stock is a better investment.
Both. Our stock's had a great run. It's up 80-90% this year, and in large part because of all the initiatives we've been putting in place for the past 2 years, but also the governance and the changes in the corporate structure certainly help. A lot more work to do, and hopefully we've got a great team at Carlyle. We'll be successful in driving on both fronts.
So put $1 in each, and you're covered.
I hope so.
Q, thanks so much for joining us. It's been a pleasure as always. Q Sung Lee of Carlyle Group. David, back to you.
Thank you, Wilfred Frost. Still to come, pot smoke's going up, pot stocks. I got it wrong, but it wasn't that good anyway. Pot stocks going up in smoke. We're going to take you to the country's largest marijuana business conference on the sector's outlook when Squawk on the Street comes back.
Most people think of Verizon.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer. Selected stores excludes Express. Ends 31st of December.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Now time for our ETF Spotlight. Taking a look at the Consumer Discretionary Select Sector SPDR ETF, ticker symbol XLY. It has experienced a roller coaster ride over the past 3 months, currently trading down about 0.1%. Home Depot, the weakest performer among the group's top holdings. The Dow Components fiscal 2020 sales forecast disappointing investors. Amazon, McDonald's, Nike, Starbucks, modest moves this morning. So far this year, the XLY is up more than 22%. Magically being up 22%, though, still means they are underperforming the overall S&P 500.
Meantime, the country's largest marijuana business conference kicks off this week with some pot stocks cratering from their 52-week highs. Our Jane Wells is live in Las Vegas with more on the challenges facing the industry, Jane, and we know there are many.
Yep, Carl, doors open in about 3 hours. This is a huge show, but I also want to show you something nearly as big. A mile from here is the largest marijuana store in the world. Take a look at it. It's called Planet 13, does over $5 million in sales a month, mostly in cash. That's a lot of cash. A huge problem one guy thinks he can cash in on. Keith McCarty is a serial startup type. He made his money at Yammer, which sold to Microsoft for over $1 billion. Then he co-founded Ease, the Uber for weed delivery. So a year ago, he and partners put in $5 billion to start Wave. Wave's a digital platform used by the overwhelming majority of California pot retailers to handle their logistics for online sales and delivery. Now it's created a B2B digital payment system for cannabis. What's taken so long?
Everything in the cannabis industry is about 100 times harder. And really our biggest competitor right now is the illicit market. And we're going after them. And I think that digital payments will really set us apart.
Retailers like Atrium in Los Angeles are going to use Wave Payments because it still pays most of its suppliers in cash.
It'd be a lot easier for us to use this also because paying different brands through bank accounts, you risk getting them shut down.
Do you have a bank account?
Yeah.
Do they know what you're doing?
No.
Okay, the fintech Wave is using comes from an Arizona company called Hyper, which has spent $30 million to create the payment system and build relationships with a couple of dozen banks and credit unions.
We're projecting that 60 to 70% of all cannabis and CBD-related transactions will either run through one of our institutions or across our payment network by the end of 2020.
It is a big goal to fill a big hole in the business model. And to get everybody on board, Wave is not going to charge any transaction fees, at least for the first several months. Guys?
Hey, Jane, I wonder how much of this is being held back by Capitol Hill, or how much more could be done if we got some passage of some major financing bills.
Oh, huge. If the Safe Banking Act, if all that could happen, then you would have more banks coming in. Then it would be, everybody taking off. Wave hopes to be first to do this so that they can get that sort of advantage over everyone. But people generally will believe with impeachment and an election, that's just not going to happen for the next year.
Hey, Jane, I hate to ruin any surprises you may have for future appearances, but what is that thing you're standing in front of?
David, this is the future, my friend. It's all about, first of all, you should look at how huge this place is. I mean, it goes on and on and on. It shows you how big this show has gotten over the years. It's all about extraction now for the edibles or the vape, even though vape is kind of taking a hit right now, or the creams or the ointments, all that sort of thing beyond just smoking it. And you need these sophisticated machines to extract as much of the THC and whatever you want from it, CBD, cannabinoids, whatever you're looking for. And so all over you see all these kinds of companies that are not touching, what they sell doesn't touch the plant. They're perfectly legal. They can sell you a machine to do whatever you want with it because they're not doing it. So there's a lot of that going on here.
All right, Jane. Looks very interesting. And we look forward to more reporting from that Las Vegas conference. Jane Wells. Let's send it over to Rahel Solomon. She's got a CNBC News update for us at this hour. Rahel.
Hi, David. And here's what's happening at this hour. A law enforcement official says that a suspect in the Jersey City shooting had published anti-Semitic and anti-police posts online. 6 people, including the 2 suspects, were killed. The suspects were identified as David Anderson and Francine Graham. The mayor of Jersey City says that they targeted the kosher market where most of the shooting took place.
We do feel comfortable that it was a targeted attack on the Jewish kosher deli across the street here. The perpetrator stopped in front of there, calmly opened the door with 2 long rifles, him and the other perpetrator, and began firing from the street.
Overseas, France's prime minister says that the minimum retirement age will remain at 62, but workers will have to work until 64 to get a full pension. This comes on the 7th day of a crippling transport strike and after hundreds of thousands of angry protesters marched nationwide. And in baseball, the New York Yankees have signed free agent pitcher Garrett Cole to a $324 million 9-year contract. And at $36 million a year, it's the largest average salary in baseball history. Cole can opt out of the contract in 2024, but quite a few mega deals this week in baseball. Now to our CNBC News update for this hour. Carl, I'll send it back to you.
All right, Rahel, thanks. Still to come. Jonas later this morning.
We are?
Yes, we are. Well, the royal we.
Oh, my. Yes. He's terrific. Legendary Wall Street funny man. I mean, analyst. Sorry.
Morgan Stanley's Adam Jonas will join us on the Investor Space Race when Squawk on the Street comes back.
Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
At Asda, packs of beer are just £12 each, including 24 bottles of Budweiser, 18 cans of Stella, or 12 bottles of Birra Moretti. Looks like you're hosting this year. Asda, let's make Christmas extra special. Selected stores online subject to availability. Budweiser 300ml, Stella 440ml, Moretti 330ml. Exclude Scotland Drink Aware.
Ah, Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
£2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
FAA Administrator Steve Dixon testifying on Capitol Hill over Boeing 737 MAX planes. Our Phil LeBeau spoke with the administrator exclusively. That was earlier this morning. He has the latest for us right now in D.C. Phil.
David, this hearing is about a half hour in. We're just getting to the questions. In fact, Representative DeFazio about to question Administrator for the FAA, Steve Dixon. He's hitting the point that after the first crash of a 737 MAX, that the FAA did some internal analysis, and their analysis came up with a prediction that there would be even more 737 MAX crashes. He's going to be obviously hitting Administrator Dixon about that, and that's one part of this hearing. Why were the decisions made that were made by the FAA when it comes to certifying the 737 MAX prior to these crashes? The other topic that's going to get a lot of attention is what changes are being made and where is the process right now for recertifying the 737 MAX. Earlier today, in an exclusive interview, Administrator Steve Dixon made it very clear this plane will not be recertified this year. Here's what he had to say.
If you just do the math, it's going to extend into 2020.
So it won't be recertified this year. Do you expect it by the end of January or by the end of February? What would you say is realistic?
It's impossible to say, Phil. I mean, if I had that kind of a crystal ball, I would certainly be able to share it. But it's very important that our team works very closely with the international authorities that have been working with us and with the Boeing team to do this right.
As you take a look at shares of Boeing, which have been under pressure today, we should point out that we reached out to Boeing because its guidance all along has been recertification, the grounding being lifted by the end of this year, and then a potential return to service by the end of January. Clearly, that is not going to happen. At least the recertification part won't be happening by the end of this year. Boeing says it has not changed its guidance. There's no statement from the company at this time. I think they want to get through this hearing, and then potentially, David, we may hear from Boeing. But clearly, what the FAA is saying today, what they told us, runs completely counter to what Boeing has been saying since the middle of November, that, yeah, we're close to seeing this plane being recertified, and potentially by the end of this year, that happening. That is not going to be happening. David, back to you.
Yeah, Phil, what accounts for the, miscommunication, so to speak, between Boeing and the FAA?
You got to read between the lines here, David, and this comes down to Boeing has been putting out statements that clearly have irritated not only Administrator Dixon, but members of the FAA who have said all along this process needs to go a little bit slower. But the Boeing perspective has been, look, we think that we are completing these steps, that the certification should move at a quicker pace. And that's why you had a slew of statements from the FAA between November 11th and last week. 3 times we heard from the FAA where they came back and they said, you don't call the shots in terms of when this happens. We call the shots. And right now, we don't have a timeline. So that friction is clearly there between Boeing and the FAA. Though publicly, they will say, oh, look, we're working with the FAA. They call the shots. But clearly, there is friction there.
right, Phil. Thank you. Phil LeBeau. We're now getting a news alert from the Business Roundtable. Let's get to our Kayla Tausche for more. Hey, Kayla.
Hey, Leslie, the economic outlook from the corner office is modestly lower for next year. A quarterly survey by the Business Roundtable shows major multinational companies planning to hire and invest less over the next 6 months, but they still expect sales to rise. The 140 CEOs were surveyed from mid-November to early December, and their estimate for U.S. GDP growth in 2020, 2.1%. Josh Bolton is the president and CEO of the Business Roundtable. He says, quote, CEOs are justified in their caution about the state of the U.S. economy. While we have achieved a competitive tax environment, uncertainty surrounding trade policy and slowing global growth are creating headwinds for business. Lawmakers should expand, not restrict trade to help boost U.S. economic potential. The group sees the USMCA deal as a positive development. And while the survey results show an expanding economy, it is worth noting this is the 7th consecutive decline in optimism among CEOs. And that decline exactly mirrors the period of heightened trade tensions here in the U.S., though we should also note that when these CEOs were surveyed about the biggest cost pressure facing their business, half of these CEOs, Carl, said it was labor, not trade.
Kayla, we talk a lot about corporate confidence. It's a big tell on that one. Appreciate that. Kayla Tausche with some numbers from BRT. A quick programming note here as we go to break. Do not miss an exclusive with Jeffrey Gundlach on the half later on today. Talk about where he sees the next clues to a crisis. That's coming at 12 p.m. Eastern time. Oil just hit session low, down almost $1 here. With that, the Dow's going negative, down 20.
I'm happy to give you a tour. I love doing it. Hey, Jay.
Hey, NFL fan. Can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Don't want to miss a second of your NFL team's next matchup? Let TuneIn remind you. Just make sure notifications are enabled on your phone and search for your team profile on the TuneIn app. Then, find the game you want under events and tap Notify Me. We'll send you an alert as soon as live coverage begins.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
2018's biggest losers have gone from worst to first in 2019, beating the S&P 500 with their impressive gains. Find out more on tradingnation.cnbc.com. More Squawk on the Street is coming up.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
To infinity and beyond, that's one takeaway from Morgan Stanley's second annual Space Summit, with government involvement increasing, private investment obviously booming, and investor interest skyrocketing. The outlook for outer space is optimistic, according to Adam Jonas, Morgan Stanley head of global auto and shared mobility research, who joins us here at Post 9 this morning. Adam, it's great to have you.
Thanks for having us.
So just now, President tweets he's going to sign this defense bill, which includes Space Force. So is it private or public that's driving the train right now?
Both. All the above. I think that the key takeaway from the second annual Morgan Stanley Space Summit is that from a government perspective, the national security interest at the highest level in the executive branch is very high and really underestimated by the markets. Space is not a nice to have, it's a we have to get this right. And that was a theme from our summit yesterday. At the same time, you need the investor interest too, okay? And investor interest is really going parabolic from a low level. But we had our attendance at the Morgan Stanley Summit double year on year, and investor attendance tripled. So that combination of government prioritization and a capital formation coming together, that's what built so many of our nation's industries, and space is absolutely no exception, and we think investors have to pay close attention to this theme.
At the same time, you're seeing late-stage financing become a little bit more troubled, given what we've seen in the public markets and people not generating the IRRs that they were initially hoping for.
Yep.
Are you seeing that spill over into the space investment as well?
That was one of the themes from our private capital formation panel at the summit yesterday was, while there maybe isn't a lack of available capital, it's that you have to have the right business model. Okay, you can't just throw assets in space and hope that you're going to have a contribution margin in 5 or 10 years. There may be some businesses that can't afford to lose money and do that for a while, but things like analytics, data, remote sensing, there's certain technologies that can build on even the existing and nascent infrastructure that can generate a margin earlier. And even from the Virgin Galactic perspective, which we recently initiated on, the space tourism business, it's basically fundamentally grounded on technology that's been around for many, many decades. In many ways, it's not science fiction, it's science fact.
How much does it matter now that there's a public equity, as you mentioned, Virgin Galactic, as opposed to so many of these efforts being, well, SpaceX obviously is one side, Blue Origin has different, but they're private. Is that a catalyst sort of for more interest?
Absolutely. So when we use the Morgan Stanley Space Team cross-sector effort that we have with the strategic backing of Morgan Stanley to look at this domain, the big markets are communications, transportation, Earth observation. But the human exploration part is critical to increase public awareness and public support. Shortly before Neil Armstrong died, I believe it was on a 60 Minutes interview, he was asked, are you disappointed with the pace of this space program, the U.S. space program? And he said, yes, I hoped we could have done more. When asked why, he said, when we lost our rival, we lost the public support. Now we have some rivalry in space, and that innovation is going to do some pretty exciting things for capital markets and for things I think we can continue to talk about in your program in the years ahead.
When you think about trillion-dollar deficits, right, national debt interest spending, making cuts to food supplemental programs, how much of that is going to be a pushback on the national security interests in sort of putting a flag in space?
The emphasis is dual purpose. Space, the difficulty of putting a man on the moon, bringing them back alive, the secondary implications for compute, internet, sensor have affected, and we've been monetizing in the velocity of commercial activity, right? Of civilian activity. And so every step of the way, that interplay between government stroke national security, which might have an unpleasant undertone, but then the enormous commercial applications, that's what's different this time. So when you get folks like Bezos and Elon Musk involved, while you could have, on the one hand, a scary, national security type, military type conversation, these technologies have direct application to growing access to internet and communications and the many, many thousands of exabytes of data that we need to move around the world sustainably.
So not just national pride, in other words.
It is absolutely not national pride. This is building the future of our world, including as we get distance from Earth, we suspect that as you put humans in space, looking back and getting that overview effect, they're going to come back and they're going to come on your program and they're going to be climate evangelists, for example. When they see the vulnerability of our planet and you see the world without borders. Sorry, I'm getting a little too.
I like it.
Don't cry. Stop
Greta
crying.
Thunberg's on the cover of Time.
I know.
Wipe your eye.
We can take a view right now and just show people the picture, Adam. And get the idea.
Well, there's no substitute to getting someone live, coming back, and saying I was there and I saw it. So and again, from Director Kevin O'Connell, Director of the Office of Space Commerce at our summit yesterday, he said this is bipartisan. There is very little debate on a partisan line of the importance of space at the government level.
Really quick on Tesla, we follow your coverage so closely. We talked about your note earlier this week.
I believe it was last week.
Yes, Porsche-like margins, the whole thing. Why not get rid of the bear case number? Why just jettison that out of the research?
Listen, if you looked at the fixed income markets, and if we were having this conversation on your program just a few months ago, their bonds were trading in the 80s, right? They have a debt equal to roughly, 1 times, not quite 1 times, their trailing prior year revenues. It's a very indebted company, so we have a lot of financial leverage. We still have a lot of unproven economics and a lot of volatility, right, and competition. So I would argue that the combination of the leverage and the uncertain outlook, we want to make sure we covered that. And we could debate whether 10 is too aggressive or if it was 90, whether that would be a conversation. Folks, leverage works both ways here, right? And I would remind you, when we first initiated on Tesla in 2011, we had a $70, the stock was 22, we had a $70 target at that time, I emphasize. Our bull case was 150, and our bear case was 0. So you could have just as easily gone back and said, hey, you're adding no value. Perhaps we got lucky along the way, but yes, the emphasis is leverage, and we had to get that risk out there for our clients.
And we don't expect, unlike what he did with Solar City, that he's ever going to actually merge SpaceX into Tesla, right? Back to space. They'll stay separate.
I would never say never, but I don't know anything.
Other than launching a car into space.
I would just tell you this. We've written about this in our research about the ecosystems and how Tesla's cars are producing and consuming massive amounts of data in IoT. It's the Internet of Cars is the mother of all IoT markets, and how having a cyber secure, redundant, resilient pipe in space may have some benefits. That doesn't mean that the companies need to merge, and I think Elon Musk is really sick of us asking about that on conference calls. I'll let you draw your own conclusions, but there's room to cooperate, and you could ask Gwen Shotwell and others that question and have your own discussion.
Okay.
It's great having you in.
Thank you for having me. Happy holidays, everybody.
Adam Jonas.
Take care.
All right, let's send it over to John Ford so we can get a look at what's coming up on Squawk Alley. John.
Send it over to me, David. Yes, we are going to check in the next hour, check back in with the Goldman Sachs Financial Services Conference, and Wilfred Frost, CEO of Bank of America, Brian Moynihan, is going to join us in just a few minutes on Squawk Alley.
Most people think of Verizon.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. We dropped off our Christmas shopping at the hotel. Then it was off to be spellbound at the Theatre Royal Bath. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
'Tis the season to be hunched over your laptop, not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
The Honda Jazz, the car that feels fabulously small on the outside, yet deceptively big on the inside, with its incredible storage solutions and magic folding seats. Not to mention the suite of advanced safety features. And now with the small but big Jazz event, it's available with 0% APR representative and 5 years complimentary servicing until January 31st. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Want to power through your projects for less? Get 20% off power tools at the B&Q Tool Shop. Like the Bosch 18-volt 2-battery combi drill. Was £80, now only £64. You can do it when you B&Q it. Excludes DeWalt 18-volt 4-amp combi drill, Dremel 3000 15-piece and power tool clearance. Ends 24th November. In-store only on 23rd and 24th November, subject to availability.
Welcome back to Squawk on the Street. I'm Dominic Chu. Markets largely in a holding pattern ahead of that big Fed rate decision later on this afternoon. We are keeping a close eye on the consumer discretionary sector. As you can see here, showing a bit of weakness, one of the big laggards so far today as we head deeper into that all-important holiday shopping season. And if we take a look at one of the ETFs that tracks retail names, the ticker XRT, the Spider Retail ETF, we see some more big movers to the downside today. The worst performers outside of the S&P 500, you got names like Children's Place, also GameStop and Abercrombie and Fitch as well. American Eagle, another big laggard after forecasting weaker than expected holiday quarter profits, citing softer demand. Keep an eye on those shares and other smaller retailers, Carl. And now I will send it back downtown to you guys at the New York Stock Exchange.
All right. Thanks very much, Dom. When we come back, an exclusive with the CEOs of UPS and CVS Health announcing a new partnership. Squawk Alley starts in 3 minutes. Don't go away.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. The Miami Heat are taking their talents to Texas to take on the second-year phenom, Luka Doncic, and the Dallas Mavericks.
Back trying to make it 11-2.
This Saturday, the Miami Heat are at the Dallas Mavericks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, and a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio station. Keep it local with TuneIn.
Good morning. It is 8 a.m. at Apple headquarters in Cupertino, California. 11 a.m. on Wall Street, and Squawk Alley is Good Wednesday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with John Ford, Leslie Picker. This morning at Post 9, Morgan Brennan has the morning off. Interesting morning as we await the Fed decision this afternoon. We'll start with Apple here. Tim Cook speaking exclusively with Japan's Nikkei while visiting some local Apple stores and ink supplier Seiko Advance, defending the company's record of job creation in the U.S. and complaints that the company has faced over competition. Cook saying, quote, a monopoly by itself isn't bad if it's not abused. The question for those companies is, do they abuse it? And that is for regulators to decide, not for me to decide. Joining us at Post 9, talk about this and a lot more, BBG Ventures managing partner Susan Line and JC2 Ventures founder and Cisco's chairman emeritus, John Chambers. Good morning, guys. Good to see you both.
How you doing?
Good.
John.
I'm trying to put the comments in some context. Why do you think they're happening now, out of Cook at least?
Well, I think they're happening because there's a general concern over privacy and over moves to increase privacy at both Facebook and Apple products. But I think for him, this was an interesting moment because it's the first time he's really tried to defend a monopoly. He has not said they are a monopoly, but he's trying to create this image of the beneficial or beneficent monopoly, which I think is a way to start trying to stave off whatever regulation may be coming. And honestly, I think it's inevitable that there is going to be regulation.
Because we're in an era where big is bad in tech. Is that not true, John?
I think the technology large companies have misused their power. And I think 90% of Americans used to view tech was good. Today, less than 50% do. So I think it's an issue way beyond monopoly. Both the Democrats and the Republicans said antitrust is coming, monopoly is coming. However, I am a Tim Cook fan. I think he's been more an example of how to deal with this, how to deal and be visible, learn how to work with government leaders regardless of political parties, China, U.S., India, and be very candid about the criticism and listening to it and adjusting where appropriate. But I think because of some of the mistakes some of these peers have made, you're going to see the large tech companies really challenged on this. It isn't a question of are you the market share leader, whether you're an Amazon or whether you're an Apple. Apple only has 13% of the smartphones. But are you the dominant player to where you misuse that power in terms of pricing, where you misuse it in terms of killing startup innovation, where you misuse it in terms of setting a pace that others cannot compete with fairly?
And John, that's a lot of my issue with this conversation. We say it's around antitrust, but I don't think it really is. It's about bigness, because the argument for Apple as a monopolist is the weakest argument, I think, across the board in tech. Yes, they're big, but as you mentioned, even their smartphone market share is small. Their market share in pretty much everything they do, computers, is small. You have to go to talking about Apple products as a market in and of themselves to make an argument that Apple has a monopoly. Is this really an assault on bigness more than it is about abuse of monopoly power? And if so, is that healthy for the startup ecosystem even?
Oh, three really good questions. In the sequence you raised them, first is the companies largely brought it on themselves. If you watch, and you watched us during the 90s, the top high-tech companies worked, even Apple. We worked very closely with Washington, with the Democrats and the Republicans. And when they had legitimate concerns, we addressed them together and said, how do we work through those issues? But I think probably Tim and Satya at Microsoft have done the best job of trying to strike the balance between the two. Part of the movement is a rebellion against big. And I think that's the issue when the pendulum swings, it swings way past logical to an extreme. I think they do have to deal with some of these issues, and I think some of the companies didn't work it out